The roller coaster that is the stock market continues, and the best thing we can do is to stick to the plan. Hello and welcome back to the channel. Before going through the portfolio, I just want to talk about the overall market conditions that we've had for the last couple of weeks. Specifically, whether the drop in the markets has left you feeling a little bit uneasy. As someone who's been investing in stocks since 2010 and trading options since 2013, I gotta tell you that whenever I felt uneasy about my positions, it's rarely been a question of strategy, but rather one of risk management. Maybe you have more invested in the stock market than you can afford to lose. Maybe you're over leveraged and are in danger of getting a margin call. These are all questions of risk that you need to answer if you want to succeed in investing in the long run. No one knows how long the current patch of volatility is going to stick around for, and there's no better time to make sure that your risk management is in check. Last week I made a video about how I'm managing the overall risk in my portfolio. Check it out at the top right hand corner or click the link in the description below. Also, if you're getting value from these videos, I would really appreciate it if you could click the like button and subscribe to the channel. Thank you. Alright, with that out of the way, it's time for the portfolio review. Best Buy had a bit of a wild week, dropping as low as $94.03 before ending the week at $97.64. Despite all the volatility, the $90 put option is only trading at an $8 loss with 20 days to go. This option expires on February 18th and earnings are on February 24th. I would prefer not to roll the position past earnings, so I'm moving my order to close this position from 40 cents to 60 cents, or about 50% of max profit. We'll see if we need to take any more aggressive action next week. On to Dick's Sporting Goods. Dick's had a relatively quiet week and only dipped below $100 very briefly on Monday. Unfortunately, because of the overall increase in market volatility, option prices are still quite inflated, so this position can't be closed for a profit right now. The risk of this position is being assigned 100 shares at the $95 short put. That's about 16% away from where Dick's is trading right now at $113. Once again, we'll be taking the wait and see approach for this position. Johnson & Johnson finally reported earnings and the stock actually took a slight dip before smashing right back above the $170 value yet again. I managed to do a quick trade in my main account and made $180 in 24 hours, but for this account I haven't done anything to the trade. The whole position, including the first roll, has collected a total of $453, and the total profit on that is now $322. Because our long-term goal on this option is assignment, I'm going to let this run for at least one more week before making a decision. On to Realty Income. This position is very similar to Best Buy in that the option expires before earnings on 22nd of February, and I would prefer not to roll it through earnings if possible. In light of that, I've set an order to close the position at 35 cents if we do get there. Next up we have SCHD, which is showing a $2 unrealized loss at the moment. This position is so far out with 47 days to go that we're just going to leave it be. The nice thing about this being an ETF is that there's no earnings dates or announcements to look out for, so there's a lot less to do to keep an eye on this position. Finally, we have the covered strangle in Walgreens. The call portion of the strangle has lost almost all its value, now trading at 6 cents. But the put is not doing so well this week, heading back up to 59 cents. As always with the Walgreens positions, all my options are a covered strangle, trying to earn more premium against the 200 shares of Walgreens that I own, which I'm holding on for the dividend. There's nothing to be done here, although we're heading towards the 3-week mark where I normally consider rolling or establishing a new position. We're going to see if Walgreens gets a little bit of a bounce next week and if we can move these out to the March cycle. Looking ahead to next week, earnings are in full swing with Amazon and Google reporting earnings. On the dividend front, we have AbbVie, Starbucks and Clorox among others, which are some of the companies I have on my watch list. And I will once again be looking to sell options on any weakness in their announcements. For the overall market outlook, I'm not one that really trades on direction, but periods of volatility definitely work in favor of option sellers. Personally, I really enjoy these choppy markets where it moves 2 or more % up or down each day, because a lot more opportunities start to present themselves. Despite the down move this week, I don't think we've reached a point where people have started selling and getting shaken out of the market just yet. I wouldn't be surprised if increased volatility remains a theme in 2022. And tying back to what I said at the beginning of the video about risk management, it's important to know where you stand and what action you will or won't take if the market continues to drop. That's it for this video. I'm trying to put together a review of January's passive income as well as all the income from my options trades, so do look out for that. Until then, as always, please take care and invest safely.